Good morning. My name is Dr. Sudhir Bisht, and in today's video we want to discuss why Venezuelan crude matters to United States. For some months, for some time, there is a prevailing narrative that is very simple and, should I say, a bit seductive. The US has no real need for Venezuelan oil. This is what many people are saying. After all, America today is world's largest producer of crude oil, they say, and it is exporting millions of barrels a day, and it boasts of energy independence as a strategic achievement. But Venezuela continues to loom large on Washington's calculations, long-term strategic calculation. So this apparent contradiction, one saying that, America is self-reliant, it does not need Venezuelan oil, and the other that US is interested in the regime change in Venezuela, and it is so much interested. This has fueled endless speculations in business circles and international magazines. Some are suggesting that US has got into Venezuela because of some ideological issues or some other geopolitical issues. I think that oil remains the real driver. And to understand what is actually at play, one must step away from the political slogans and jargons and examine the technical and commercial reality of oil industry. I have spent more than 30 years in the oil industry, and even when I left oil industry, I have been watching this closely. I believe the answer does not lies in any conspiracy or rhetoric. It lies in crude, more specifically the crude quality, refinery design, capital economics, and long-term energy realism. I will explain to you my point of view in the next few slides. Please be with me. So let us now discuss that why all crudes are not the same, and why some crudes are categorized as light crude, some are categorized as heavy crude. The crude produced in US is predominantly light and sweet crude. So this is very different from very heavy crude that is produced by Venezuela, particularly from their Orinoco belt and Canada. Canada crude is less heavy than Venezuela crude, but it is heavy nevertheless. So this distinction is not academic distinction. This distinction is basically, it is all about, refining economics. So light crude, it yields, when it goes to the distillation column, it yields a higher proportion of premium products. So what are the premium products? Like gasoline, like in India you call it motor spirit or petrol, LPG, liquefied petroleum gas, naphtha, which is used as feedstock in many factories, especially fertilizer factories. Then there are some middle distillates like ATK, aviation turbine kerosene, we all call it ATF in India, aviation turbine fuel, diesel oil, heating oil. So it is quite obvious that this variety of crude, which is the lighter variety, it commands higher price in global markets. So the products also command a higher price. So, a gasoline or diesel will command a higher price than what are the heavier ends. So let me explain, what is a heavy crude. So heavy crude is, as the name suggests, it is heavy, or it is also called sour crude. It has lot of sulfur content. It is very viscous. So heavy crude, it produces more bottom of the barrel products like furnace oil, FO. Furnace oil is which you see in many boilers. It is used in industrial, or heavy fuel oil. There is also something called LSHS, low sulfur heavy stock. You must have known bitumen. Bitumen is used for road construction. Pet coke, carbon black feedstock, base stocks, paraffin wax, which you use in which goes into candle making, and which is also used for moisturizers and what have you. So the prices of all these things which I mentioned, they are lower prices. So naturally the heavy stock, it yields more of this, and the light stock, it yields more of the higher margin products like petrol, aviation fuel, and LPG. So Venezuela crude is among the heaviest in the world, and therefore it cannot be replaced by the US shale oil without economic consequences. Now let me tell you in the next slide the type of refineries which America has, because I want to submit that these refineries, American refineries, they were designed for a different era, and that the refining technology has not kept pace with the light crude that the shale oil is producing. Let me explain in the next slide. So the US refineries, US operates one of the biggest refining systems in the world. It has 135 refineries. Many of these refineries, especially those which are along the Gulf Coast and the West Coast, they were designed decades ago. And they were designed decades ago to process very heavy crude, like the ones you get from Venezuela. Now you will understand from where Venezuela is coming. So these refineries were designed to process heavy crude like the one from Venezuela, from some Middle East sources, and from Canada. So it is estimated that 60% of US refining capacity, and US has a refining capacity of 18.5 million barrels a day. So 60% of this, 60, it is optimized for heavier crude. Some estimates suggest this could be 70% also. So these refineries were designed by, let me tell you the exact figure. These refineries were designed when the Latin American heavy oil was abundant. Okay, they were designed then, and thus they are not so compatible, or should I say even incompatible with the light US shale oil, crude oil. Heavy crude like the one from Venezuela, it is sold at a discount as compared to the lighter variety. Once again, refineries, the heavy crude from the sources like Venezuela, it is sold at a discount as compared to the lighter variety, and this can significantly increase the refining margins if the refinery type is the right fit. So refineries are not flexible machines. Refineries are very fixed structures. Flexible machines can, so they cannot effortlessly switch crude types. Each refinery is engineered around specific crude variety. Each refinery is engineered around specific crude characteristic. So converting a refinery designed for heavy crude into light crude is technically very complex, extremely capital intensive, and often economically unjustifiable. And that is why it is not so easy for US to fully take care of all their crude oil needs by using their own shale oil. To understand this, there is a metric in the industry. It is called Nelson Complexity Index, NCI. This measures refineries' ability to process different crudes and convert heavy fraction into lighter, high-value products. So, for example, the Jamnagar refinery of India, the Reliance refinery, it has a complexity index which exceeds 21. So it is among the most advanced refineries globally. It can process almost any type of crude, heavy or light, and can still maximize output of premium products, light and middle distillates. So it can take product from Venezuela at a discount and process it to produce more and more of light and middle distillate. In contrast, the Nelson Complexity Index of US refinery is 9.5. So 21 of Reliance refinery, average 9.5 of the US average NCI of US refinery. So this is the level of complexity. So if you have to upgrade them to the Reliance refinery, it will require billions of dollars. More than that, long shutdowns, and you never know, the returns could be uncertain. So this is the so-called paradox, and I will explain this in the next slide. So what is the paradox which the critics are talking about? This so-called paradox is US is exporting crude and importing finished products. So critics often point out to this, that US is exporting crude oil and it continues to import also. In reality, this is not a contradiction. In reality, this is not a contradiction. It is a refinery logic. Let me explain. In the recent year, US has imported roughly 6.5, 6.6 million barrels per day of crude oil. 6.6 barrels of, and it has exported around 4.1 million barrels of crude. But it is a net exporter of petroleum products. So this explanation is straightforward. The US exports surplus light crude, while it imports heavier grades. Why does it import heavier grade? Because heavier grade gives them a better refinery configuration. Most of the refineries are configured for heavier grades. So oil is not about volume. Oil is not about volume alone. It is about quality, yield patterns and margins. So in the next slide, I'll explain to you the finished products and the economics of value addition. I hope you are enjoying this video. So let me explain this correlation between finished products and the economics of value addition. Value addition is something which is often overlooked when we concentrate too much on the volume game. Okay? Exporting crude oil, if a country is exporting crude oil, it is giving you margins. There is no doubt about it. But refining crude oil into finished product, it gives you substantial value addition. Typically $8 to $10 per barrel. Okay, barrel is 159 liters. $8 to $10 per barrel, depending upon the market condition, of course. So that is why Reliance Industries Limited is such a cash-rich company. Reliance has built all its empire on the back of the Reliance Jamnagar refinery. Because at one time their typical margin was even $15, $16 a barrel, highest in the world. Okay, these refining margins, they are crucial to the profitability of entire hydrocarbon chain. So let me tell you what happened in 2024. As I said earlier also, US exported about 6.6 million barrels per day of petroleum products, including diesel and aviation turbine fuel. But it still imported around a lot of certain products because of the regional imbalances and logistics. So from the commercial standpoint, it is very important for US to have the right crude. Why? To operate at optimal utilization, protect refining margins, refinery margins, and maximize downstream profitability. So heavy crudes like the Venezuela, it plays a key role. It plays a key role in US interest in Venezuela. In the next slide, I'll explain to you that what is the strategic weight of Venezuela oil reserves, which you cannot ignore. You must have read it at many places. Venezuela holds the largest proven or proven as you like to call it, crude oil reserves in the world, estimated at 303 billion barrels, exceeding all the Middle East countries like Saudi Arabia and what have you. This is roughly between 17% to 19% of world's total proven reserves. Venezuela, one country holding 17 to 19% of world's total proven reserves. So this reserve is a very strategic asset, and it is of immense long-term value. So let me check some more things. Okay, so you would say that, okay, but the time is now of EV. There is, in spite of growing discussion around electric vehicles and renewable energy, the ICE engines or internal combustion engines, they are unlikely to disappear at least for next 40-50 years. Even electric vehicles involve emissions across the entire life cycle, from mining to manufacturing to electricity generation. So it is not as if the EVs are free of any emission. So oil, in my view and in the view of many people who are in the oil business, it will remain central to the global energy system for decades. and access to large, reliable, proven reserves will continue to shape geopolitics. Okay. Now, in the next slide, I want to take one point. People are saying, why does America need Venezuelan oil? They can easily upgrade the refineries. Okay, let's check it out. So many people have argued, and that US refiners are upgrading facilities to run entirely on light crude. Run entirely on light crude, which is produced in US itself. So this will make heavy crude unnecessary. I agree that a lot of investments have been made. I was looking for the data, but I don't have any reliable data, so I don't want to speak. But for many refineries, the capital required for such upgrades is simply prohibitive. For them, importing suitable heavy crude remains economically a rational choice. And business is about making rational choice. The refinery upgradation narrative, it often serves as a public explanation rather than reflection of a ground level refinery economics. So in conclusion, what I want to say is that from the oil industry perspective, Venezuelan oil matters a lot to US. It is not because US lacks oil, but because US production is overwhelmingly light crude. Many US refineries are configured for heavy crude. So production is light crude, refineries are configured for heavy crude. Refinery conversion is very costly, sometimes impractical. Refining margins, they depend upon crude compatibility. And for US, large oil reserves of Venezuela, 17 to 90% of world's proven reserves, they remain strategically vital. So seen through this lens, America's interest in Venezuela, I think, is commercial, technical and strategic rather than ideological. Oil does not respond to political initiatives. It responds to geology, chemistry, capital economics, long-term demand. So any serious analysis of US-Venezuela relations, they must begin with this reality of oil. I hope you enjoyed this video. Thank you very much.